After hearing the example of Abu Dhabi and some of the trends and challenges that or the UAE are facing more generally, we're now going to sort of expand the discussion to the region and looking at some of the trends in desalination and wastewater. I'll first introduce our panel. So we've got Christopher Gasson, who is the owner of Global Water Intelligence, Ed James, editor at Mead, and Elena Burganskaya, who's the Global Head of Water and Municipal Infrastructure at IFC. The way we're going to organize the session is first each of the three panelists is going to make a brief introduction, and then so I'll throw a few questions at them, and then we'll finish by opening into the floor through the iPad. So if you have any questions, as in the previous session, don't hesitate to put them through the app. Christopher, if you want to get started.
Just a bit more energized standing up to speak rather than sitting down to speak. So that last session was quite fascinating, and it's stolen a bit of my thunder. I thought we could talk a bit about some of the implications of it. So first of all, what does it mean to say that thermal is dead in this region and there are not going to be any more integrated water and power projects, that we're moving from thermal to membrane desalination? I guess the first thing is that it creates opportunities for a very different set of people. The thermal desal players are not quite the same as the membrane ones, so this area of the world, I think, is going to become more Spanish over time. I think, but structurally looking at it, I think we're not going to see the end of the relationship between power and water. It's just going to be a different kind of relationship. And I think that there are 2 points to make here. One is that desalination could become an important part of the way that electricity is managed here, particularly if you have your storage set up, so that when you have excess power, you can use that to make more water. And that will be the new sort of, I suppose, water energy nexus in this region, i.e. a sort of management nexus rather than a production nexus. And the second point is, it's the question of solar power. Now here the big issue is, are we talking about photons, or are we talking about electrons when we talk about solar power? You can make solar power with a solar panel or a concentrated solar power plant and then move the electrons around. And from the desal point of view, it makes no difference where the power comes from. Desal doesn't discriminate between electrons, but desal could potentially also be made by photons, i.e. direct solar power. And if we think that direct solar power is more efficient than electrons as a means of harnessing the sun's power in desal, the desal industry's got a huge challenge ahead of it in delivering that efficiency, because at the moment, we're very good at boiling water or filtering it, but we haven't yet figured a way of harnessing photons effectively in desalination. Moving through the different issues, I guess demand management seems to be a big issue which is really sweeping the region. In Saudi Arabia, they've increased their tariffs quite dramatically a couple of weeks ago, specifically reducing the first block where you actually begin to pay serious amounts for water down to 15 cubic meters from something like 100 cubic meters. And that is going to have a huge impact on demand. Now, I seem to remember that, I think most of our guests from Abu Dhabi have left, but actually it was Dubai which pioneered this approach to demand management. And in 2009, they introduced water tariffs for the first time to locals. And as far as I can tell, they haven't built a single new desalination plant since 2009 as a result. And this is a big unknown. How is demand management going to have a long-term effect on the demand for water in the region? Then, reuse. That's another theme which is, been quite an important issue across the region for some years. I think Oman has been very big on it, and obviously we've seen some activities here and in Saudi Arabia. I'm just looking at the sort of balance between water reuse and desalination and comparing it around the world. And my count says there are 8 water reuse projects currently, on the drawing board in the GCC region, and 27 desal projects on the drawing board. Whereas in California, I think we're seeing something like 54 water reuse projects and 28 desalination projects. So, okay, reuse is a thing, but it's still very much a desalinated, desal-led market that we're talking about here. Next a point, which I don't think's really been covered, is drainage. This is sort of tied up with the whole global warming adaptation theme. That, what we're discovering around the world is that, even though you might be living in, a very dry city like Jeddah or Riyadh, that flooding, is still an enormous issue. I think Riyadh was the one which got dosed last year, with underpasses filling up and so forth. And I think, though, that issue, I suppose, ties in with the sort of deep tunnel sewers and so forth. But I suspect that, as a result of the adaptation to climate change, we'll see a lot more investment in drainage in the region, but, only when we see sort of terrible floods. And these things are going to happen. You don't think that it's going to happen in Abu Dhabi, that there could be a flood, but there could, and that's serious. Smart networks are another area of investment which has taken off, and I think that particularly tied in with the demand management, we'll see a lot of investment there. I suppose the seventh point I've got written down here is Iran. I don't know if I'm allowed to talk about Iran, but Iran is the new business opportunity for those who are here to listen to business opportunities. Interesting, I've got 37 projects, water and wastewater projects in Iran, of which 30 are wastewater treatment plants. It's a massive wastewater market there. We've got 6 desal plants in Iran. But the big problem in Iran is finance. I met a guy last week who said he'd won a $180 million project in Iran, and he was very pleased. And he said all he needed to do was find somebody who was prepared to be paid in oil to finance it. And I think that leads on to the final point, which is finance. That we are seeing this sort of flight of capital out of emerging markets, out of natural resources economy markets into the dollar. And that is going to have some impact on finance. And I suspect that we might see Elena getting a bit more involved in helping things in this area as a result of that. But there are some sort of nasty risks out there. For example, if I were, the deputy prime minister in Saudi Arabia and I had to pay my payroll and I was a bit short of money, I might be inclined to question the dollar peg, simply because it's the easiest way of being able to meet your domestic liabilities when you don't have very much in the way of oil revenues. And when people start questioning the dollar peg, then the whole finance thing goes completely up the spout, particularly from a water perspective, which only has domestic revenues, but generally is financed in dollars, which, obviously becoming very strong. Anyway, those are my various observations. I'll go back and sit down and leave it to the next bit of the panel.
Thanks, Christopher. Ed, do you want to give us your sort of introductory comments on the...
Sure. I think there's a couple of slides that are coming up while I'm speaking. So good morning, everyone, and thank you to the organisers for inviting me here today. I'm going to talk a little, just very briefly about the supply side. I have two slides just to accompany this, because it just outline the situation today regarding desalination. We do have we do have data on wastewater as well, but just for the sake of brevity, I'm just going to focus on desal. And let me just touch on the point that Christopher made when we look at this table about Dubai introducing tariffs in 2009 and the impact that's had. And you're absolutely right, Christopher. Nothing has been built in terms of desal in Dubai since then, and nothing is planned beyond 2020. Thank you. So you can see here, if you look at the second row down, Dubai, in terms of desalination capacity, is at 470, peak demand 316, forecast by 2020 390, 4% growth, mainly as a result of the tariffs being introduced, and therefore there's no need for new desalination plants. So clearly it works, and we just heard the previous session, very interesting information that following the introduction of tariffs in January last year, very early last year in Abu Dhabi, there's been no discernible demand growth or growth in demand for potable water in Abu Dhabi last year as a result. And so that's a magnificent achievement. So we're going to go down from 4% to almost nothing, and that's obviously going to have an impact on the investments required. Now, so before the tariffs were introduced, Abu Dhabi was looking at something in terms of 336 extra million imperial gallons a day. That number might now be substantially reduced following the introduction of tariffs. And we should see a similar situation in places like Saudi Arabia and Oman, Bahrain, which are raising tariffs as well. So until recently, this is 2014 data. 2015 data is never normally available till halfway through the year. We were looking at something more than 2.2 billion imperial gallons a day of new desalination capacity required, and that's new build, excluding the replacement of aging desalination facilities. Some facilities, particularly in Saudi Arabia, are more than 30 years old, do need replacement. So that number theoretically could have been much higher. However, with the introduction of tariffs, maybe we're going to see a drop in demand growth and less capacity required as a result. Just also importantly, going back to Dubai and the tariffs, Dubai has also was able to introduce the tariffs ahead of all the other countries, largely because it has a large expatriate population, some of whom are quite wealthy, and the tariffs in Dubai weren't actually raised for local nationals, and as a result. Yes, but there's a split. There's a split in Dubai between the local nationals and the expatriates. So the expatriates are charged more for the water, and as a result, Dubai was able to do that ahead of time. Now, that's not necessarily an option that was available to some of the other countries which have not have the same sort of demographic mix. So you can see that various countries have different kinds of challenges. Kuwait, currently Oman and Bahrain have a greater peak water demand than they actually produce, and as a result have to dip into their groundwater and surface resources, and also have invested substantial amounts in reservoirs and emergency storage projects as a result. But by far the largest market is Saudi Arabia. Not real surprise, it's got the largest population, the largest economy. And just finally, just to show you in terms of some of the big projects being planned, selected projects underway, the largest single project that we know of is the Hayman wastewater treatment plant expansion, which is going to be done on a PPP basis in Kuwait. The bidding for that has already started, and we should expect to see that awarded later this year. Also through PPP structures, we have the Al Zor North IWPP in Kuwait, the Al Hiran project as well, and further phases of Al Zor. And as Christopher said, we're now seeing, and we heard earlier in the previous panel, we're now seeing the IWPs becoming much more prominent in the region, especially as ROs are being introduced more and more. UAE recently launched its first IWP project. IWPs are pretty common in Oman, and we'd expect to see more and more such independent facilities being developed in the region as time goes on. So I know we haven't got much time, so I'll leave it at that. And thank you.
Thank you, Ed. We'll now hear from Elena.
Well, thank you, and it's a pleasure to be here. I guess in the interest of time, I'll just be very, very brief. A couple of themes from my side. I guess the big question, which both of my colleagues alluded to, is whether the demand management is going to be sufficient to really address the scarcity issue in the region. I mean, if I look at what my colleagues at the World Bank are forecasting, by 2030, there should still be room for additional desal and reuse capacity in the region, depending on the countries. And this is something that we're very keen to support. Our couple of key focus countries in the MENA region, Egypt. We're also looking at Jordan, at possibly working with the World Bank together on the Dead Sea project. From the financier point of view, I guess fundamentally what we're looking for good bankable deals, which require financially sound, well-managed companies, whether they're publicly owned or privately held. And the key to that is getting the affordability cost recovery balance right. And in that sense, I think the current economic turmoil may be an opportunity in terms of revisiting tariffs and also looking more seriously at the appropriate targeting of subsidies. I'll just leave it at that, and then we can, I'm happy to address other questions.
Okay, well, thanks, Elena. Well, actually, I'd just like to start by, picking up on your last comment around, the increases in tariffs that we've seen, in some of the countries in the region. On the previous panel, it was mentioned that, in Abu Dhabi, they've been, able to sort of curb demand, and it's turning out to be, quite a success. So I'd like to, hear from the panel, and starting maybe with you, Christopher, as to your views as to what effects that might have been in other countries in the region.
I guess that there are two sides of demand that need, or two parts of demand that need managing. There's the domestic demand, and there's the sort of agricultural demand. With the agricultural demand, the issue is mainly this groundwater overdraft question. How do you, when you've got a country where often you have local citizens involved in the agricultural sector, exploiting groundwater, which is never going to be there again, and in an unsustainable way, and you've got to keep jobs for these people and so forth. I mean, I'd be very interested to see how this water budget for the UAE works. I think in Saudi Arabia, what they're talking about is trying to manage their overdraft down from, I think, 11 cubic kilometers a year to 5 cubic kilometers a year. But it's still an overdraft, and it still sort of casts a shadow over the long-term future of the whole country. But it isn't something which is sort of going to blow up in anyone's face in the next 10 years. So it's, in that sense, less of a problem, even though it is potentially an existential problem. In terms of the domestic demand, I mean, just going back to the sort of situation in Dubai. Now, I seem to remember that it's something like 87% of the population is expatriate and 13% is a citizen. But the water usage was 80% used by the citizens and 20% used by the locals. And introducing a charge, which I think is about a third the rate that the expatriates pay, had a dramatic impact on that. And to some extent, that people are going to have to bite the bullet and make sure that it is the sort of local people that, or at least the citizens, who pay. And I think that is essentially what is happening in Saudi Arabia. And that is probably the best news that's come out of the oil price crash all round. That so if you start forcing people to pay for water out of necessity, sooner or later the agencies will actually realize that it's possible to run these businesses as businesses, charging for water more than it costs to make, and actually, like DEWA, have a nice little cash machine there. So I'm sure that this is a transition which will actually benefit the water sector in the long term, because it will mean that the water utilities are able to invest for performance.
Ed, you got something?
Yes, I completely agree. And just on the issue of tariffs as well, it's not just a case of raising tariffs, but then actually enforcing payment. And that's always been an issue, but having the metering systems in place, making sure the collections and payments to be had, and that's always also historically been some of the challenge, particularly in places like Saudi Arabia. Another issue as well is unaccounted for non-revenue water. Some of the rates here for non-revenue water in the region are very high. In Qatar, I think it's something like 20%. In Saudi Arabia, historically, although the data is hard to come by, I've seen levels as high as, in some cities, as high as 45%. There are savings to be made as well, just by plugging leakages, making sure there's no misuse of water transmission systems, and it all has to go hand in hand with a policy around tariffs and supply increases. It's a multifaceted area, and just looking at one and not looking at the whole picture is the wrong policy. So it has to be a strategic, all-encompassing approach. But as we've seen with the Dubai issue, and as we've heard this morning, raising tariffs does have a very strong impact on demand growth. Long term, population growth is still very strong in the region, and that's not really going to change. Economic growth is still going to be quite high in the long run, so not going to stem demand growth indefinitely, and so there will be a need for new facilities over time. But nonetheless, it's a very encouraging picture that we've heard today.
Any further comment on this, or
no?
Okay. Well, I'm conscious this is actually a very short session, and we only have a few minutes left. I'll throw one other question, and then I'll switch to the questions that are being submitted by the audience. Given the sort of current turmoil in the markets, the pressure on budgets and so on, but the fact that obviously there are still growing needs, growing population, economic activity, driving demand, and so on. I'm just curious to hear your thoughts from all three as to how that may impact the way that projects are delivered, potential evolution of the role of the private sector, and also how that affects the role of an institution such as the IFC. So maybe Elena, you want to start?
So the World Bank has this database, which is called Private Participation in Infrastructure. And if you look at the latest data, which is available, is for the first half of 2015. And if you look at the database, the private participation in water is as miserable as it has been for the past 5 years, even more so. It's less than $1 billion globally, and very, very small in this region. So I think actually the current economic difficulties and the fiscal constraints on governments create opportunities. Certainly, I think there's not much choice for government, frankly, than to think more seriously how to engage private sector in the industry. The challenge is, again, is that for the private sector to be engaged, it has to be commercially viable. And that goes to the core question of how do we price water, and do we price water, until and unless we do it, I think we're going to continue to see not enough private participation in the industry.
Yeah, just very briefly, over the last 15 years, almost all states in the GCC have now introduced, had the PPP or BOT structure, or BO structure employed for water, power and waste in the region. So I don't suspect that will change. Following the IWPP in Dubai last year, IPP in Dubai last year, and the first IWPP in Kuwait, all 6 states GCC now fully engaged with the PPP BOT structure for power and water. I don't expect that to change. It's very, for the private sector, very sort of low risk, long-term guaranteed type take it or pay structure. That might change as over time, but nonetheless, I don't see that the involvement in the private sector will be reduced. In fact, if anything, will just keep increasing, especially with low oil prices.
Do you think that Saudi Arabia will come back to the fold?
Well, I think...
when will it come back to the fold? This year?
Yeah, I mean, it's been stop and start for Saudi Arabia, NWC and SEC and SWEC in terms of private sector participation. But given that the oil price, given that it's every other state is now fully engaged with it, I would expect that to hopefully come back to the fold soon. But there's still not a lot of clarity around Saudi Arabia's long-term desalination plans and what they're planning to do and how to do it. So we're waiting for that. And there's another story completely, which is on the renewable energy side. Still also a lot of doubt there. So we have to wait and see.
I mean, my sort of picture of what's going on is that, across the world, we're getting people sort of saying, well, actually the future is private sector finance, but saying this just at the moment where private finance becomes non-viable, i.e., when they realize that they've not got any money left themselves, and their economy is very unattractive to private investors, that they are deciding that privatization is the thing. Now, I feel that this is the area where we really need a lot more engagement from the sort of multilaterals to provide the kind of sort of risk guarantees to keep this market open and ensure that this opportunity is seized, rather than the private sector retract as the money pulls out.
Any reaction to that?
Well, we're very keen to provide more support, but from where I sit in most markets, still, even in the current economic environment, at least what we're seeing, it's not so much the liquidity issue, it's the solvency issue in the industry, meaning finding bankable projects to finance and bankability. So I'm not suggesting necessarily that we need to move to the private ownership of water assets. I am suggesting that we need to think about commercial sustainability of the water industry, of the players in the water industry, whether they are municipally owned or otherwise publicly held or privately owned. Yeah. That's really my main pitch.
I mean, I think there is, there's both sides to it. Indeed, there's clearly an issue around viability and the tariffs and so on. But just to touch briefly on your first the first part of your comment, there is also a liquidity issue. I mean, Ed was mentioning Al Hayman, which is currently being tendered in Kuwait. We're the financial advisor to one of the bidders, so we're currently trying to raise a few $100 million for it. And I must say that I've had some quite unexpected conversations with a number of banks in the region, where even on a government-backed project, a number of prominent banks are having a really hard time lending long-term and for this type of deal. So it has added to the whole difficulty. I'm afraid that we have run out of time, so we need to wrap things up at this point. I'd like you to thank our panel, and don't hesitate to come to them if you've got any further questions that you want to discuss over the coffee break. Thank you.